All right, folks, although Powell was known for hitting the stock market on Fed days, right? We know it, right? His average annual return ain't bad. I mean, he's right up there. Only one person in recent time has done better. I want to bring in jpmorgan Asset Management, their chief market strategist for the Americas, Gabriela Santos. This market seems to be increasingly reliant, though. This is one thing that some people talk, maybe the age of financial engineering. Between fiscal actions and monetary actions, corporate America is making out great. Are you concerned at where the Fed has become, so at the beck and call almost it feels for corporate America?
So I think for the Fed, as long as they don't do any harm from here, corporations can continue doing really, really well. What we mean by do no harm is don't raise rates into what's really a supply shock. Demand is really not that strong. This is not 2022. When it comes to the stock market, though, it's AI,
Right.
maybe deregulation.
Right.
But it's all things
Right.
AI, and that's what's driving a huge upgrade.
I want to get back to the market thing in a moment, but let me ask about sort of where we are with the Fed a little bit more, because is Wall Street putting too much hope into Warsh, you think?
So I think in terms of investors, it's not really expecting too much change, to be honest. It's a change in the chair, but not an overall change in the committee and the way that the committee is processing the data.
The head of the chair, though, is expected to be dovish and expected to sort of cut rates and to be accommodative.
That's what I think is interesting about the three dissents, hawkish dissents today, which were really more about personnel than policy. I think it's a little bit of a preview of the discussions
I
to come.
hate to say it, but, it feels like a sort of a shot across the bow.
Exactly.
I mean, they threw down the gauntlet. We got a new chair coming in, but we ain't budging.
Exactly. Look, inflation is still part of our mandate. We'll still stay focused on it. And that's why I think inflation expectations are very well anchored. Mm-hmm. And really the change in leadership is a little bit more in the back burner when it comes to equities. It's
interesting because you already talked about essentially maybe the Fed having a look through with respect to oil. Sounds like that's what you're talking about. That brings us to the consumer. Okay, the consumer is strong. We always say the consumer is if it's the one person, but we know that the top 20% is most of it, and the rest of it's, the bottom 80% are there. Is this enough, though, to keep the overall economy going through any potential hiccups or bumps in the road?
I would say the consumer's okay. What's really, really strong is the top 20%. And here we're showing just the huge increase in wealth of that 20% of the population, rising home prices, rising stock prices. Now, if anything, the K is getting more K-shaped.
Yeah.
That's because of the rise in gasoline prices, which we think are about breaking even if you compare that to refunds by income.
All right, so we talked about the economy, we talked about the consumer. I want to get back to what you're talking about, AI, the AI lift, because you're really excited about this. You don't think it's a passing fancy?
Absolutely not. I think it's the fourth year of this AI investment, but it is certainly on a new season, meaning the way you actually invest in AI is just going to keep changing. Mag 7, what Mag 7? You've only have three actually outperforming the index this year. This has really moved from who's doing the AI CapEx spending to who's receiving that AI CapEx spending. And it's semiconductors, hardware, electrical equipment, so power and metals.
And this is really amazing. I mean, and on an individual basis, we've got names that, again, I wrote off SanDisk a long time ago. I never, I wrote off Western Digital a long time ago. And you've got these names that are being resurrected. I mean, this is a very powerful force. And I don't think it ends anytime soon either.
And I think what's exciting, last year you were already getting some of those AI CapEx beneficiaries do well, but it was all about GPUs, that cutting edge new type of technology. No, you need the old school stuff too. You need the legacy tech. And as a result, you're seeing a much broader rebound from these AI CapEx beneficiaries.
Well, I miss you. Haven't seen a couple Fed meetings, so you stick around,
Good to be back, yeah.
We got a heck of a panel coming up, folks. All right.